Hey traders, Nick Shaheen here looking at NIO, the e-car company basically, in China. And recently, well, here's what started this video. What prompted me to do this video is I posted a chart on Twitter about levels and I got heat for it, and I was trying to say nothing but, hey, maybe it's too late to sell now if you're still hanging on to it. For some reason it triggered some responses I didn't expect. Okay, so first of all, I'm long the stock, and I'll tell you how later. I'm still profitable in it. So the problem with it going into the earnings is this guy right here. So recently, I think last week, maybe 2 weeks ago, within the last 2 weeks, 60 Minutes did a show on it, or a bit on it. And of course, when it hits the household, so these are the late chasers, boom, up 3, almost 4% on the day of the earnings, and then the earnings came out, and boom, the thing just got killed. And 2 days in a row. So when it fell on the first day, I thought that, okay, it's not going to be a one-day event. So let me expand to a daily chart. It is a relatively new. So it's not one-day event. One big one, one left, big open gap. It's still nowhere near its all-time highs. When it opened up, when it got IPO'd, it rallied to whatever the value is, $13, $14. It had a nice bullish setup here that failed. So I consider this a complete roof. And it's not fake. So it's not a fluke, I should say. Watch this. So failed, right? Came back down. Failed, right? Came back down. Right here, if we stopped the time right here, we'd say, okay, here's an opportunity. If the bulls can overcome this failure point, this would have come. This is an inverse head and shoulders. You know, one shoulder, one head, one shoulder. Very well-defined neckline. So it failed. So I'll extend the neckline over to here. Okay, so you can argue I could have drawn many necklines down here before. Here's one right here, right? Same scenario. They failed from here, came back and failed, and came back the second time they didn't fail. And this would be the measured move. And it's no coincidence that they came back to here, peeked over it and failed. So here we go. Another head and shoulders. Well, right here, I guess. 1, 2, 3-ish. This kind of a island poke. But you can argue that they attacked the same neckline over and over until they finally broke through. Unfortunately, they broke through on an artificial event, which was just hoopla from a show, a TV show. Nothing changed in their fundamentals. And also what helped the rally is Tesla. Tesla was falling. So money that wants to be in EVs will switch from Tesla to this. So this was kind of artificial. And it still didn't touch the all-time high. So it came into earnings up here. And then earnings came out and they had a loss, a wider than expected loss. Boom, boom. Here's my take. First of all, a loss on a growth stock doesn't really worry me. When I'm looking at a growth company, I don't care if it's profitable or not. I'm worried about the upside, just like Netflix, just like Amazon in its early days. You don't judge it on the bottom line. It's more so the top line. Are they growing sales? Then they say, okay, the acceleration, the growth is decelerating, but it's all muddled. We've had tariffs, and that probably pulled sales forward or backwards or whatever. So the reports are murky at best. Not a reason to chase it up 4, 5, 6, 7, 8, 9%, and not a reason to sell it down 20, 40%. So what do I do now? Well, it's easy. If I was long up here and I didn't sell out, it's probably too late to sell out. So it depends on where I entered and what my break-even point is and what my stomach tells me I can withstand or not. So I look back at levels. This is a daily chart. I usually look more granular, but we can see levels here. So I'm just zoomed in. I'm going to pull up a new piece of paper. So these are rough candles, and they say, buy it on the third day. So maybe we'll have another dip tomorrow. But there should be support in this zone because this is a pivot point. This was a neckline here. They fought over it here. There was a battle, bulls and bears. There was a battle, bulls and bears. Well, it's here. There's going to be a battle, bulls and bears. It's not a hard line in the sand. It's a zone. So it could be as low as this. So I drew a couple of lines. I put one straight line on $7, and I forget what I put the second one. So And then this is another battle zone right here. So these are obvious points. I like this zone number 1, and then this is zone number 2. So this is why I say if I'm long it and I didn't sell out here, I probably want to see what happens here before I sell out. All depends on my level of risk, how much money is at risk, my whole portfolio, what can I withstand. There's an intangible, oh my God, can I sleep? All depends on personal preference. If I want to sleep, I'd buy puts if I'm long the stock to protect me. They're cheap now. The event is gone. They're cheaper than before the event. So how am I long? I sold puts in it a long time ago, and I booked some. I sold them at 5. What? Yes, I sold them at $5. I sold puts, I don't remember, probably here or here. I usually sell them on bad days. I collected 67 cents for them. So if I did 10 puts naked, $670 went into my account. That money is not mine. I win by saying, by the stock not falling below 5, and they expire in, I'm going to say June or July, I can't remember. But the point is, I committed to buying the shares at $5. That's how I'm long. So those went down to 30 cents or 27 cents. I booked some. I still have some. And I also bought some puts in protection at 6. And those are up also. So I'm profitable on both ends. So I can close it tomorrow. So I can't tell you I'm bullish the company. I know nothing about them. The stock tells me that here there should be support because of the prior price action. That it's at a level, if I look now, it's been fought over for as long as it existed. I'm just drawing my knife across here. Pivot, 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 pivot. So it should find some support here. I'm not saying it's going to hold. It's not a hard line in the sand. It's a rubber band. If it fails, this is even better support. So I think from here to fall further, it will need a negative response. So something that says, oh my gosh, there's something wrong in its going forward. And it's whatever, makeup going forward. They lost their CEO, they lost a patent, something. So then I would be forced to buy the puts, to buy the shares at $5, which would be an all-time low. So this is how I went long. I think the puts are now worth 50 cents or 40. I didn't even look at them the last couple of days. That's how not worried I am about my puts because A, I'm somewhat protected, and B, it's so far out of the money. Anything can happen, but that was my bet on it. And that is my take on the levels that are here. Now, here's something that could scare people. I'm going to, take the other side and say, oh, I'm going to piss off some people here. Okay, so if I say that this is a level of sorts, we've got one shoulder and one head. If we get a bounce here, and then the bounce fails, and they come back to this level, and that level fails, my $5 put will be taken out. That's my opinion. Because if I say this is so I expect this much of a fall, wherever that level is, 5.3, 5.4. People, this is not a forecast. I said we could get a bounce here, but if we do, I'm out of my puts. And if this happens right here, if this holds, and it holds, perfect. If this holds, and it doesn't hold the second time, the 1, 2, 3, the third time, then we go lower. All right, my whole take on NIO. Nick signing out.